Are you wondering where GameStop is headed next? What about AMC? Well, stay tuned because in this video, we're going to talk about GameStop, AMC, and the overall state of the market. I'm your host, Trader Jojo, and this is the Stock Market Weekly Recap.
This just in. It's the Stock Market Recap.
This is the man who's going to make us rich.
This is the man?
Yes.
This man lives in a cardboard box.
So throughout the course of this video, you're going to hear me mention some terms that you've probably never heard before. So today's words that we're going to go over are doji and topping tail. Stay tuned. If you're new to my channel, go ahead and pound that subscribe button for me. If you guys would like to see certain stocks or tickers featured on one of my episodes, go ahead and post them in the comments. And without further ado, let's look at the charts.
Ooh, charts. Charts.
Okay, first up on everyone's mind is GameStop. So we see the big spike, right? Everyone's big question, is this thing going up or down? That's what everyone wants to know. Well, first off, I would never buy a stock like GameStop. It's negative earnings, so it has no financials, and any potential for this stock to go up is not going to be based on anything other than pure speculation. And speculation is bad because speculation equals gambling. But if you guys are all intent on losing your money, I guess we'll go ahead and analyze the chart. The very first thing we're going to do is look at a Fibonacci retracement. Now, what is the purpose of a Fibonacci retracement? I like Fibonacci retracements because they tell us bounce levels. When you get a good fit, you can tell because you'll see your stock price action kind of gap around the levels, which we're seeing here. You see how down to the level, break. You know, this is a classic candlestick setup for a lower market. So right out of the gate, everything looks good on the retracement in terms of, you know, what happened. This thing spiked to 483, dropped all the way down, gap below. Look, and you'll see these are called breakaway gaps. They'll break away. They'll break under or break over a resistance level. So right here, this just gapped right below. And then you're seeing now the new price action literally just come up. And what you're seeing here, when a gap's created, market makers hate, you know, you've ever heard that expression, nature abhors a vacuum. Well, market makers abhor a gap. So market makers love to fill these gaps because basically it represents a blank piece of price action where no one was able to trade, even though the stock was traded at both above and below that. But a lot of times what market makers do is a simple half gap fill. They won't fill the whole gap, and you can see that right here. What does this suggest to me? This paints these things combined, the Fibonacci, the gap, and then this rise paints a very clear picture about where this is going. This is going down. Do not buy GameStop, okay? I'm gonna show you why here. Technically, you're in an intermediate downtrend, right? And you're still in this downtrend, okay? But it's telling to me that a market maker only filled half this gap, right? Price action only went halfway up to this gap, and then it fell back down. This means that this price is not going to be seen again for a long, long time. And how do we know that? Because they already filled it half, and then 2 days went by where it didn't try to reclaim. So I do not foresee an additional breakout on this. Now, does that mean that this stock's not going to go higher? Odds are, which is what statistical technical analysis is a breakdown of odds. The odds are that this is going lower, okay? I would not put a dime in GameStop. I would short GameStop. But again, I want to draw a very clear distinction right here. If you're investing and trading are two completely different things. And when you buy a stock like GameStop, you're not investing, you're just gambling. And you can get better odds, honestly, going to the casino. So don't save your money, okay? I know a lot of people fear of missing out, FOMO, right? But what happens? What happens if this thing skyrockets? Well, I'll tell you exactly what happens. Yeah, you missed out on it skyrocketing, but guess where it's going? Right back down. Why? Because there's no financially justifiable reason for the stock price to be as high as it is. So all of you who think that GameStop is going to go to 400 or 500 and then just keep on going, I got a reality check for you. It's never going to happen. Not until GameStop actually turns a profit. People say, oh, but profits don't necessarily matter. You're right, they don't. And what you see in a strong bull market is a big disconnect between a profitable company and the stock price, right? You'll see Tesla trading at hundreds of times what it's actually earning. But when the market's correct and in a downturn, those are the stocks that get pummeled. Those are the ones that come down the most. Because in the end, financials matter to an extent, okay? And a stock that goes up really, really high without a solid financial standing is coming right back down. Avoid it. Avoid GameStop. It had its moment in the sun, and I'm sure, even with this little rise, I'm sure there's still a few people out on Wall Street bets and traders that are still trying to manipulate this price higher, but that's all they're doing. This is not an investment, okay? This is market speculation, gambling, and manipulation. Avoid it. All right. Okay, moving right along on to AMC. Oh, and did I mention we may have a special guest later on in the episode? I can't tell you who it is, but I can tell you who it's not. Not Morgan Freeman. Okay, AMC. So right away, I mean, this is looking this is looking exactly like the GameStop. All right, so if we draw our Fibonacci, there's a few minor differences on this one. One, I think this has a better regression. I think this is more in an uptrend. I actually do think AMC is in somewhat of an uptrend. The big issue that I have still, if we're looking at this stock, this is the last earnings, right? How much money did AMC make? Well, they lost $5 a share. So I don't know about you, but I personally don't want to own companies that are losing money. That's kind of against the point of investing. Do they have a solid plan to turn around? I don't think they do, but we'll see. AMC has been in a sustained downtrend, and you can see it's been below the moving averages up until it broke out. Why did it break out? Again, manipulation. Personally, you guys want to know whether or not to play. If you have an inside track on a stock, like for example, you were on Wall Street Bets before it started breaking out. And that's the key word there, before. And you knew that this is what they were doing. It would have been a smart play to have gotten in both AMC and GameStop. I will give everybody that. But this is the thing about getting in on these moves. It makes no point in getting in after the move's begun. And the reason why is you really don't know a lot of times how big these moves are going to be. And once they've started, there's a good chance that you're getting in at the top, which all these people just got crushed. All right, so the question now is AMC in any better shape than GameStop? No, I don't think so. And the reason why is because you're just gambling. This chart doesn't look necessarily any better. You've also got an earnings thing coming up. Most people think, earnings are a great time to play stuff. I never play earnings. I never hold a position into earnings. It's the worst possible time. Wait till the earnings come out and then make a decision. There are a lot of rules I've picked up over the years investing, and I follow them. And why do I follow my rules? Because they make me money. And that is a golden rule. Never own a stock into earnings unless you're holding it for a long-term investment, in which case it doesn't matter because it's long-term. All right. But GameStop is not, AMC, this stock is not one I would consider long-term investing. Would I consider a swing trade on this? No, probably not. And let's do a fib extension just to kind of plan out where this is a little different than a retracement. This can show a potential breakout point, new high. Where's the low here? Let's say right there. Okay. Boop, boom. Didn't it fail? So it failed at 966, which means what I would expect now, where is AMC going? Well, AMC is going to go right back down to 531. It's going to retest, this is some pretty gnarly. In fact, what do we see here? We see a big gap, and then what do I see? Just like GameStop, we see AMC filling a half gap. What does that suggest to me? That you don't even have enough volume for a market maker to potentially fill the entire gap, which they would want to do. So the fact that they didn't even fill the gap all the way, I take that as a very, very technically negative sign on both GameStop and AMC. In fact, that gap alone not filling and then having these huge red bars, I wouldn't touch it. I would not touch either of these. Swing trade or investment. Sorry, guys. I know that's not what a lot of people want to hear, but you're just gambling. Save your money. There are much better plays. There are much better plays, all right?
It's the chart of the day, and I am not Morgan Freeman.
Thanks, Morgan. That was not Morgan Freeman, by the way. I just for not Morgan Freeman. Or was it? Okay, so chart of the day. Today's chart of the day is the NASDAQ. Brought to you by, I don't know, let's say Nabisco. They make excellent crackers. You know, we did some charting on the SPY, but the NASDAQ is actually looking a lot worse than the SPY. So I wanted to go over this today as our chart of the day. The first thing I want to draw your attention to, let's look at the long term. This is how I like to do my charting, and I'll reiterate this in more of the moves in the movies that we make. I'm going to reiterate. The first thing I always do is I look at a max time frame. Okay, max time frame. So this is, this shows you the long-term trend. What's the long-term trend? I think you can see this. It is up. The long-term trend is up. Now, the other very important thing I want to draw your attention to is the channel I just drew. This is the long-term regression channel. And what is this channel showing? It is showing a parabolic move far outside this channel, okay? The other thing right away, and this is why I personally love candlesticks. I saw a very funny picture the other day, and it was about two traders, and one, their setup, they had every, study and oscillator and tool known to man, and then the other one was like just a few simple lines and using candlesticks. And the caption was noob trader and professional trader. And that's very true. It made me laugh. Because the more you know, the less tools you use. I only use a handful, and I'm going to make some videos, which we'll put in the links below, to kind of show, what tools do I like to use as a swing trader / day trader. So candlesticks are my absolute favorite, okay? And one of the reasons why is because they really, really can tell you what's going on. So this is the NASDAQ, all right? We saw that channel that it's way outside. The thing I want to draw your attention to first off is time frame. Each one of these candlesticks in this chart represents a month. Okay, what am I seeing right here? These, if you don't know anything about technical analysis, these two types of candles are very, very, very bearish. They are very, very bearish. So for the first of these two candles is a doji or doji. I always get the pronunciation wrong. It's DOJI, and this represents kind of a spin. Basically, what a doji represents is indecision. So prior to this doji, you have a whole bunch of. It's not indecision. Anytime you see a full bar, that's a pretty. That means that it opened here and it closed here, which is basically just straight up price movement, right? Not a lot of indecision. But then you come to one that bounces around, closes lower, and is right in the middle is where that meat of that price action took. Then you have another month go by where again, there's a ceiling here, and again the price action went all the way up, boom, all the way back down. We call this is almost a spinning top. Notice the word top, and that's what it means. It literally, when you see tails like this going through, you potentially have reached a top, whether that be a short-term, long-term, intermediate, that remains to be seen. But we have basically what this is suggesting is that the market, at least the NASDAQ, has topped. Okay. What do I expect now? I now expect a period of consolidation. And that means sideways action. How long? Probably the entire year. And this may be prolonged. I think some people have been predicting this too. I would expect once the markets do turn and eventually top out, which it could be another month. You've got 2 months already, right, on the NASDAQ. I would expect a slowing off, and then I would expect real heavy resistance right around 11,000. It's probably going to be closer to 11. But you can, and why do I expect it? That's a really good question, right? Why? Because each bar represents months. And how many months in a row did we trade? Did it go down to this 11 number? 4. This alone represents a considerable amount of sideways price. You know, this was a consolidation period. That means there's a lot of volume traded here at these levels, okay? Which means there's going to be support here. When this falls all the way back down, this is where the first real major support's going to be. And I do see this move coming. It also will coincide with the get it on the day chart. Actually, so this is really important. Right now, you're below the 50-day. So now that this 50-day is above, this is going to act as a line that's going to push the, you know, the price is going to stay below. If you're above this line, it acts as a bounce, right? A support, we call that. But once you become below, it acts as resistance, and it puts downward pressure on the stock price, okay? So now that we're below the 50-day, I see 100% more downside. I would see a full test of the I would expect a full test of the 200-day moving average on the Nasdaq. That means, and this is the thing about down markets, they happen traditionally much quicker than an up market. So whereas these might have taken a full month, this might only take a week or two, and we could be all the way down here. It could be in 3 days we could be down here. So all hope is not lost. The very last thing I want to draw your attention to is this gap right here, okay? So we have this big gap down, but what do we know? We know that market makers abhor a gap. So what am I expecting? Well, there's a couple of ways this could play out, and this is what you want to watch for in this coming week. Way number one, we could pop up here, close this gap real quick. If that were to happen, I would be scared. That to me would suggest that we're going lower, much lower, faster. But if we straight drop, let's say gap down on Monday, I would possibly expect more of a less pronounced rebound and a comeback up to close, and it would be a more gradual of a drop. What do I think is going to happen? I don't know. That's tough. I want to make note of this gap up here, though, because ultimately I think we're going, and this is why. I'll show you why. Everyone wants to know why. Let's get the right drawing here. Okay, this is the line I want everyone to pay attention to. This is why I think we're going lower. We have a gap down on super weak. And at the same time, we made a lower low. So that's a clear indicator. Generally, we are always making higher highs and higher lows. So when you make a lower low like that, on a pronounced scale, you're talking on a day chart, not a 15-minute. But you're looking at this on a day chart, right? This is you made a lower low on a day chart. At the very best case scenario, we have entered a period of sideways action. Worst case scenario, we're gonna be doing a full drop down. It may take some time. Like I said, they've already got a gap here, but I would expect this gap to fill probably sooner rather than later. So it's not going to go straight down. There will be an exit point coming up for people to exit, but it will possibly this week. We'll see. If it happens quickly, I would, like, if we have a nice rebound on Monday, don't buy the rebound on Monday. That would be my strongest advice right now. Don't buy the rebound on Monday. We've been given, the signs are there. We've been given warning. Okay, so remember how I said on the NASDAQ that there was a gap I thought would have to be filled? Well, that is the trade. And this entire trade is predicated on an if. If this gap fills, which means if this price action at some point comes back up to fill this gap in the near term, it would have to be in the near term. That would provide the perfect entry point to ride this thing down. Okay? And I would recommend probably doing, if you're looking at actually swing trading this, you want to give yourself enough time, but you Okay, so we're talking leverage. Okay, so if this comes back up to 100, which I would expect, monitor 100. All right, here's where it gets interesting. All right, so what do we got? 3 cents. How big's this now? We gotta have. So this is the thing. See how I'm looking at these open interests right now? That this is where you gotta buy. You gotta buy around something that's got market. Okay, if it doesn't have a market, you're not gonna be able to sell them when you need to. I like these spreads, 75 to 70. These are excellent spreads. All right, let's look at this. This is your trade right here. Yeah. That is your trade. That is a good risk profile. That's your trade right there. Trade of the week. And honestly, you're gonna be able to get this so much cheaper too. That's what's real cool. Because if you buy this when this thing spikes on the rebound, I mean, so for every $87, you can potentially net. You could potentially net 413. So you're leveraged. You're leveraged in this. This is a swing trade, but this entire trade is predicated on an if. If this thing comes back up, and we're still clearly in a downtrend, and you'll know based on the volume. But this is a very nice play. You could potentially, and it might happen tomorrow. It might happen on Monday. We'll see. Okay. Subscribe. You guys want it? You want more alerts? You want more trades like this? You want more beginner info? I know the beginner stuff. That's what I'm working on. We're gonna make a lot of beginner stuff. Subscribe. Hit that, pound that like. We'll make more videos. Thanks, guys.